Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name's Manpreet and welcome to Cut to the Chase. Now today is World Health Day, marking the day the Constitution of the World Health Organization entered into force in 1948. Now, it's often used as an opportunity to draw attention to a major global health issue each year, and this year, the focus is on keeping humans and the planet healthy, given the WHO estimates about 13 million deaths a year occur due to avoidable environmental causes, including climate change, which incidentally is a key focus in the investing world as well. Now, for markets, there are three things we'd focus on today to gauge the world economy's health that we believe have implications for investors. The first is the release of the Fed meeting minutes, where the focus was on two areas. On interest rates, unsurprisingly, the minutes showed that many participants were open to the idea of a 50 basis point rate hikes as inflation stays high. Now, it's worth noting here that the Fed estimates that the neutral policy rate sits between 2.3 to 2.5%, and the pace of rate hikes currently priced by markets would actually get us there by year end. The other focus was that the Fed plans to start reducing the size of its balance sheet by shedding $95 billion a month through runoffs, or not reinvesting the proceeds of maturing bonds. Now, this is about double the previous $50 billion a month the Fed started way back in 2017. The minutes also showed the Fed would consider outright sales of mortgage-backed securities once the whole process is underway. Now, there were a few surprises in the market reaction. Bond yields rose further, equities pulled back. Yesterday's move does, though, leave the S&P 500 back just a touch below its 200-day moving average. Now, as we noted yesterday, this is now the key to the short-term outlook. A pause or rebound here would help support a range-bound or a more positive outlook. And while we remain optimists, given the Fed rate outlook appears largely priced, a sustained break lower, though, could trigger another leg lower. Now, the second focus was in China, where the private sector Caixin Services PMI dropped sharply to 42, the lowest level since February 2020 and well below the 50 mark separating expansion from contraction. Now, what made this all the more notable was that the data here was collected before the lockdowns were imposed in Shanghai. Now, we note that the manufacturing PMI, which is arguably a more important indicator for economic turning points, is not quite so pessimistic. However, the services PMI reading does directly feed into our view that more policy support is likely needed and is likely to be forthcoming, which should help Chinese equities bottom. Finally, the IEA said it would release 120 million barrels of oil from reserves in order to help counter the risk of reduced Russian oil supplies. The US will contribute half of this amount as part of IEA efforts, but also release an additional 120 million barrels directly, resulting in a combined strategic oil reserve release of 240 million barrels over the next 6 months. Now, this is 4 times of the prior release of 60 million barrels, which did fail to quell oil prices, but falls short of the 3 million barrels a day the IEA estimates is at risk from potentially curtailed Russian oil supply. Now, we believe this may slow, but not completely reverse the recent rise in oil prices. For energy sector equities, though, we would be less concerned, because recall here, our focus was not just rising oil prices, but simply closing the gap between oil prices and the lagging equity sector. So overall, a day to watch S&P 500 technicals, watch for more policy support in China, and look for any opportunities to add to energy sector equities on dips. We'll pause there. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.